Hello and welcome. Thank you for joining us. This is Business Incorporated coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. On the program today, South African Vodacom Group revenue rises 3.9% to 20.7 billion rand in the first quarter. The International Monetary Fund urges Mozambique to address debt audit concerns. Plus, a Moroccan court grants an extra 3 months for the liquidation process for Samer, the country's only oil refinery. Let's get started now with the markets. And the markets we track here in Africa, we're all looking green at intraday. The market in South Africa was trading up 0.33% as investors see the possibility of an interest rate cut later in the day by the Reserve Bank. Here in Nigeria, the index was up 0.09%. Nigeria is expected to hold rates at 14% on Tuesday and through this year, but will reduce borrowing costs by 175 basis points across 2018. Our reports say Africa's major central banks are entering an easing cycle as they try to stimulate growth after months of drought, austerity drives and confidence issues across the continent. In Egypt, the index was up 0.41% and Nairobi closed up 0.08% on Wednesday. In the Middle East, the markets were mixed, but Qatar continued rebounding from lows hit early this month because of its diplomatic rift with neighboring Arab states. The Qatari index rose 0.55% at intraday to 9,554 points. It closed at 9,924 points on June 4, just before the crisis erupted. Our quarterly bank earnings and macroeconomic data in recent days have shown that the impact of the crisis on Qatar's economy so far is not as bad as some had feared. Non-Arab foreign investors have been net buyers of stocks, while Gulf investors have continued to cut holdings in Qatar. Elsewhere, Dubai's index edged down 0.23% as Amlak Finance soared 14.3% and was the most heavily traded stock after real estate developer Damac said it was partnering with Almac to sell second homes to customers. Damac fell 1.3%. Now, Saudi Arabia's index edged up 0.34% as Saudi basic industries climbed 0.8% to 99.60 reals. Morgan Stanley raises the stock to overweight from equal weight and lifted its price target to 122 reals from 86 reals. Abu Dhabi was down 0.80%. And in Europe, bourses there were higher in early trades, supported by a surge in global stocks as investors awaited a rate decision by the European Central Bank. For details, here is Daniel Coop, my colleague at the Frankfurt Stock Exchange. Hello, Daniel. Good afternoon. Good to have you back on the show.
Good afternoon. Hello from Frankfurt, from a city where everybody was watching very closely today the ECB decision.
Sure. The ECB, of course, holding their general meeting today. So how closely are investors watching this, and what do we know so far? They should have brought out their results now.
Well, Mario Draghi is actually speaking at this very moment, but the news was actually breaking already about 30 minutes ago. And actually, it's no surprise. There are not going to be any higher interest rates, at least not for the moment. It will stay at the 0% policy that he has been basically following throughout the last time. You can see a direct impact right now. You can see it very well here at the blue chip index. Like after the news was breaking, shares have been jumping high here at the stock exchange in Frankfurt. We are up with more than 100 points actually right now compared to yesterday. Why is this happening? On the one hand, because investors actually they wanted higher interest rates, but they also don't like to be surprised. So since everybody was expecting the news that that there are, at the moment at least, no higher interest rates, they are relieved that they kind of interpreted basically the thinking and the politics of the ECB in a correct way. He also announced that actually the ECB will continue to buy huge amounts of government bonds just until December 2017. They want to invest more than 60 billion euros in those government bonds. So some people here at the stock exchange were actually expecting that this might stop. It doesn't seem to be the case. So everybody but still will be watching very closely the exact wording he is going to say this afternoon, because many people think that maybe there could be an indication for higher interest that may be happening after the German election here in Germany in September. There's going to be the next ECB meeting by that time. So yeah, it's going to be very interesting what's going to happen. We're watching it very closely.
Honestly, Daniel, I don't envy Mario Draghi. Now, he seems to be under a lot of pressure. Many people have asked for higher interest rates. Now, who would benefit from higher interest rates and who will not?
Yeah, you're right. He's under big pressure right now because basically lots of people want those higher interest rates. When you look at the German government, we had Finance Minister Wolfgang Schäuble just a few days really calling for a higher interest rate. People here on the floor behind me at the market, they also want the higher interest rates. So it's really a big question when it's going to happen, because also when you look right now at inflation data, this could be actually a sign that higher interest rate would actually be okay and that they would not disturb the market. Who is benefiting right now from the 0% interest rate is mostly actually people that want to have a credit. For example, if I want to buy a house or buy an apartment in the next time, I mean, I could really benefit here in Europe from this policy. But mostly big companies and also the market, they would really benefit from higher interest rates. So yeah, it's really interesting and really interesting issue, and all the eyes are on Mario Draghi, and actually I don't want to be in his seat right now.
All right, Donna, let's look at the corporate news side. German multinational software corporation SAP came out today with its earnings, raising its annual forecast on the back of strong growth in the second quarter. Now, what are the numbers saying?